How are you all doing, guys? And welcome to Advanced Fundamentals Part 2. So for anyone who hasn't seen Advanced Fundamentals Part 1, I would recommend that you go back and watch that. That one was hosted by PC and H. Paul. But I'll do a quick recap of what the guys were covering on that stream. So they covered trader types and mindsets. So your beginner traders, your intermediate traders, your advanced traders, and the types of trades that they take. Your trade types. So you have your reactive scalps, scalps with potential, your day trades, your swing trades. And the guys went in depth onto like the different ways to look at these trades and how to manage them, which was very important. The other one is recognizing the trading environment. So your ranges and impulses. So for me, it was, I had to put a bit of thought into this, that what could I bring that would bring value in an Advanced Fundamentals Part 2. So the guys have covered all the different types of traders and trade types. I'm going to cover different day trading types. Okay, and I've broke this into two categories, being your balanced and non-directional day types, like your normal day, your normal variation day, and your neutral day, and then your trending and directional day types. So trending days, double distribution days, or PRB distribution days. And from identifying these earlier on in the day, you can kind of get a good context of who's in the market. And you've probably heard me talk about this time and time again. It's good to know who's in the market. Is it smaller players? Is it scalpers and day traders, which you would get on the likes of a normal day and neutral days? On normal variation days, you'd have the smaller players, and then you would have bigger players come in during that day. And on trend day types, you would have the likes of bigger players pushing that market. So this kind of gives us a context of where we'll be looking for the day. So very important to know these day types. So with that said, let's kick this off with the balanced day types. Starting with normal day. So normal days, they're not that common. So it usually happen when you get a quick move in one direction on that daily open. So during the initial balance, the first hour of price action, you get that move. And then after that, price tends to kind of die off or go sideways. So little or no deviations from that initial balance on that day. So let's look at some characteristics of a normal day. You have that large initial balance, so the quick move in the first hour of the daily open. The initial balance remains unbroken throughout the day. Like sometimes you get wicks up above and below, but no significant candle closes at all. And after that first hour of the day, these days either go sideways or retrace the initial move. So, after that initial balance, you normally see price go sideways or just starting to come back down to entry nearly. And here is a profile of a normal day, and the two purple lines being the initial balance range, the purple being the initial balance, and here is the exact same profile but expanded. So you can see in the first hour of price action, first half an hour we moved up, second candle, big impulse to the upside, creating our initial balance, and you can see we did a couple of wicks through it but haven't broke out of it, and basically sideways choppy price action. Normal variation days. So like a normal day, it starts off in the beginning of the day, it's normal, we get that medium to large initial balance, and then after that you have the bigger players stepping into the market to move the market in one direction. So the characteristics of a normal variation day, you get that medium initial balance. Then what we're looking for is when price breaks the initial balance low or high, it extends to one side of that range. So unlike the normal day, we couldn't break above the initial balance high or low. On these normal variation days, you get a break of that initial balance low or high, and then the bigger players step in to extend the range, extend to one side of that initial balance. So price tends to revisit the initial balance high or low at the end of that trading day. So on those normal variation days, I'll show you in the profile. You can see here, start of the day, medium to wide initial balance. We lose the initial balance back test. We get a move away, and then we come back up into the range, giving us our normal variation day. Neutral days. So a neutral day is when both buyers and sellers are active in the market on the given day. So you get good moves to the upside and downside, giving you like a real well-balanced profile. These days are great for day trading. Just trading range, really good. Characteristics of a neutral day. So again, you see the initial balance being deviated on both the upside and the downside. And a couple of tips that I would use on this, like using TR pockets and extensions, are great on neutral days, because we're looking for the deviations of the initial balance on both sides. So we know now that the TR pocket is great for giving those levels to the upside and downside. So why not use these on neutral days? Price will close within the initial balance at the end of that trading day. So I'm going to show you that on the profile. You can see it's well-rounded profile. We start off the day, extend out, back test the initial balance, extend to the upside, back in, and then down to the downside, deviating both sides of the initial balance, and then coming back within that range on neutral days. So now let's move over to trending day types. Trending days. So on trending days, bigger players are stepping into the market, and as a result, we're going to see price moving in one direction. And this is, I suppose, where you've heard me talk time and time again. It's all about knowing who's in the market and when. Okay, so on these days, you see little or no pullback, and price is trying to get somewhere for those bigger players. That's when we can start to build context in our day. So what are the characteristics of a trending day? So firstly, on a trending day, you'll see a small initial balance. So that's our first heads up. In the first hour of trading, we get that small initial balance. One time frame and occurs on trending days. So for anyone who doesn't know what one time framing is, I'm going to be posting this in the Discord, but we'll see this on trending days. So on these days, don't look to fade the day. Trade with it. Trade with the trend, because those bigger players are in for a reason, and they are trying to push price to a higher target or lower target depending on the direction of the trend. But this is where we start to build context, and this is where I use like the market profile or TPO template on these kind of days, especially for trying to see where price is going. Because when you have the bigger players in the market, they're looking to push price to either rest in liquidity on a naked point of control, or liquidity sitting at swing highs or lows or high time frame levels. So when I see a trending day, they're the levels that I'm looking at. I'm not too interested with intraday levels of support and resistance on these days, because bigger players are in to do a job on those days. Here's a quick look at a trending day on the profile. So you can see up here, small initial balance, back test that initial balance, and price just moves away in one direction for that whole entire day. On that also, guys, what I will say is this template that I'm sharing here within the stream, I will be sharing afterwards within the Discord. Double distribution days. So on double distribution days, you don't really see these that often, but what we do get is that balanced range for a part of the day, move up, quick impulse to the upside or downside, creating single prints, and then we start to range for the rest of the day. So again, like a trending day, we get that small initial balance. That's our first heads up. And I'll show you this when we get to the profile. So on here you can see price is trading around at the start of the day. We lose the initial balance, back test it, and come down and sweep the previous day's low, and then make our way up. Like, and you could get caught out here thinking, is this a trending day? Like a trending day, you would be trading along, lose the initial balance, then a big impulse to the downside. So with this, you come down, swing failure of the previous day's low, and then or some liquidity level, and then start to make our way up. Quick impulse to the upside, printing our single prints, back test them, and then we're trading at higher prices for the day. P or B days. So these tend to happen when you get a move on the open of the day to the upside or downside, creating that P or B shaped profile. Days like this are usually caused by long or short squeezes. Now, with the initial balance on these days, it can vary. Sometimes it's a small initial balance, other times you can get a large initial balance. So that varies. Fast move on the open, followed by consolidation. So I'll show you this in a profile. So you can see we didn't spend much time at the lows, and we start to move up. And then we're consolidating up here, giving us that P-shaped profile. Now, sometimes you can see this initial balance being a whole lot wider. Just the first hour of price action is a straight move up, followed by consolidation sideways, or for a B day, it's just this flipped upside down. So what days to trade? This one for me is an important one. So now that we know like the different day trade types, then it's, as a trader, you only want to be in on the high probable days. So for me, I don't trade like the normal day trade type. I step out of those days. I look for different assets, or I look at commodities or whatever, or sometimes I just don't trade those days. So it's about knowing what day you're going to take what style of trading. Like, you know, you get your neutral day. They're great for range trading that day. So I'll step in on a neutral day and I'll take your shorts at the highs, your longs at the lows. And, you know, it always comes back to closing at that 0.5 or that point of control of the range. So again, knowing your trading days and what suits your style and what kind of levels to use on those days. And like, if we look at the trending days, like I said, we start to look at those higher time frame levels more so than your, you know, you might have a small value or a mini range value area high from a previous day, or a VWAP close. I don't look at those levels. I look at the higher time frame levels on those type of days. Then what days of the week? This is one I'm going to leave you on. So what days of the week do I like to trade? And I suppose my bread and butter trades are the trades that are the days that I spend, you know, trying to get in those good weekly trades, are in the first 3 days of the week. And I'm going to show you why. So here's a quick chart of the last couple of weeks on Bitcoin. There's a 75% chance of us putting in the low of the week on a Monday, Tuesday, or Wednesday. You know, so with that in mind, that can kind of build your context for the week. So I like to try and, you know, be ready for those days. So you can see it down here. We got a big spike to the lows on the Wednesday, followed by a big move up. Following week, low was put in on a Wednesday or on a Monday. Again on the following week, put in on a Monday. Following week, put in on a Monday, and so on Wednesday. So again, just this week, Monday, that was the low of the week. You know, so build that into your plan as well. So now that you know the different day trade types, then kind of you want the highest probable days of trading. Well, depending on your style of trading, that is as well, but the highest probable day of trading to fit what you're doing. You're like, for me, I don't bother with weekends. you know, they're 9 times out of 10 choppy and sideways. I don't care about them. It's a waste of my time. You can spend that time doing what you want, your hobbies, at home with the family, whatever. But my bread and butter days are the first 3 days of the week. You know, that's when I'm getting to business. After that, you know, you can enjoy the rest of the week. But it's a good way of looking at it. You know, when you have those statistics in your favor, you'll start to kind of calm down on the trading. You'll stop over trading, you know, and less is more when it comes to trades. Be very picky with your trading, you know. Be very, very picky with your trading. Be very picky with your trade setups. At the end of the day, only take what you feel comfortable with. And for me, these are the days that I like to take it. So on that, guys, I'm going to love you and leave you. But before I do, here's the early Christmas present for Mr. Trader R. We have the pivot strategy on the 21st of December. Don't miss out on that one, guys. And with that said, Slán.